Greetings, friends. This is Chris Batts, and you are listening to episode number 16 of the Future is Bright podcast. In today's episode, I spoke with Matt Saur, co-founder and partner at Woolery Co. We discussed his journey to Cravath, Swaine & Moore, and then King & Spalding, how he met Jim Worry, and what led them to launching Woolery Co. We discussed their unique approach to advising family offices and other clients in M&A, litigation, activism, and more. Stay to the end to hear how Matt applies his relational superpowers to achieve client results and so much more. If you haven't already, please subscribe to this podcast and leave a review on iTunes and YouTube. A bit more about Matt. Today, Matt is a strategic advisor to a select group of corporations, families, and institutions, and advises them on complex and critical business, governance, and strategic decisions. He began his career at Cravath, Swaine & Moore, and was most recently the chief lieutenant in the M&A, shareholder activism, and corporate governance group at King & Spalding, where he co-led the family office initiative at the firm. Matt has been involved in a number of high-profile corporate transactions with an aggregate value exceeding $100 billion. He has been recognized as a leading dealmaker and business leader, including as a top 40 under 40 dealmaker by the M&A Advisor and a 2022 Rising Star by Global M&A Network. Matt serves on the board of directors at Usona Institute, Stat Muse Inc., and Synthesis Retreats. Matt is also a member of the board of trustees of Theo College. Matt received his undergraduate degree from Theo College with a double major in international business and business administration, and his law degree from Notre Dame Law School. Welcome, Matt, to the Future is Bright podcast. It's great to have you on the show.
Great to be here. Thanks for having me.
So, Matt, I have an affection for the area of line of business that you're doing, working in the activist industry and providing not just legal advice, but lots of different things. And I'm just excited to have you share your journey and what you're up to right now. It sounds like a blast. And so I'd love for you to share, how did this all start?
Yeah. So, the short version is my partner and I were at King & Spalding, a big law firm. We were based out of New York, but historically the firm was based out of Atlanta. And we were developing kind of a new approach on the corporate side that focused around kind of public and private M&A, shareholder activism, and corporate governance. And both he and I had had a history in all of that with a focus. I would say the differentiating focus for us was the big investor. And a lot of times for us, that wasn't the private equity firm like you might see at a Kirkland & Ellis as a client set. It was the family office and the founder. And a lot of our clients in that space, both on the company side as well as the investor side, started with that relationship with a family or a founder that was either a large investor of a company or still leading that company. And so we developed our practice there at King & Spalding and had some success. And, our clients started to push us to try to do something different that better served them. We kept running into conflict issues at a large institution with a big litigation and investigations practice. You get those conflicts. Yeah. And on the corporate side, that can be frustrating for you. And so we ended up spinning out, starting our own boutique. We're a small team and really serve to be that strategic advisor that the clients seem to want. Yeah. And we will, like a general contractor on your house, when we're doing an M&A deal or some big litigation or otherwise, where we need other resources, we will contract in a lot of the big firms for that piece. And so on an M&A deal, we don't have the team to do diligence or all of the execution. We do the high-level quarterbacking and strategic advice, and then we bring in other resources, whether it's clients' existing resources or firms that we do business with all the time.
Yeah. And how long have you and your co-founder had Woolery Co?
We've been at it for a little under 3 years now.
Under 3 years. So during COVID, you guys decided to
We launched right in the teeth of the pandemic, which was it's funny because in some ways you would think that would hurt us because it was a challenging environment for everyone. And when we launched, we didn't know what the deal environment would look like, what the financing environment would look like. We had strong conviction around our thesis of what would be successful. But there were other things that helped us. For example, no one expected us to have an office space when we first started. Yeah. And so you could keep costs low and really build a lot of it virtually. And then I think we were also able to be more nimble early on from a travel perspective, where a lot of the big institutions had policies against that for good reason, but we could be more selective on how we did that. And I think it helped us with going and seeing clients and spreading the message early on. So it, in a lot of ways, it worked to our advantage, even if it was a little precarious when we first started from an environment standpoint.
Matt, let's take a step back, and I'd love for you to share with my audience, where were you raised? This journey of you actually becoming a lawyer, and give my audience a little bit of history for them.
So I grew up in Western Maryland, kind of 40 minutes outside of Baltimore. My mom was from Baltimore. My dad was from DC. So they kind of picked somewhere that was equidistant. It was a farm town, and frankly, not a lot of people left the town that I was from, growing up. And I had an early suspicion I wanted to be a lawyer, or at least inclination of it. My uncle was a lawyer in Baltimore. And he seemed happy and successful. So I kind of went on that path. When I was in high school, we had majors you could select, and I picked the one that was leading down kind of the pre-law path. And when I went to college, it was a lot of the same thing. I was originally a political science major, thinking I want to go to law school. And I played college football at Teal College. It's outside of Erie, in Pennsylvania. And one of the things I wanted to go to law school for, frankly, the main thing, was becoming a sports agent. And it was that sports background. It was kind of the time when the sports agents were getting a lot of press on ESPN and TV. Jerry Maguire was big. And I thought it looked like a great career path. I could stay in sports because I wasn't going to be an NFL athlete. And I got through college, I got dissuaded by my dad had a friend that was a pretty prominent NFL agent. And he said, don't go to school to become a sports agent. He said, go and try to get on the team side or the league side. He said, that's where you're going to have the most success. The business stinks right now because of how the regulations changed. And so when I went to law school, ended up going to Notre Dame, kind of further moving into the Midwest. And that was a family school for me. I had two uncles that went there, cousin that went there undergrad. I grew up a Notre Dame football fan, so it was kind of a dream come true.
That's awesome.
And I had thought I wanted to get into corporate work because of that advice, is kind of a backdoor to get into the sports world. And that was reinforced through law school that my first summer internship, I did mainly litigation, absolutely hated it. And my second year, I ended up getting an internship at Cravath, Swaine & Moore in New York, doing corporate work, and absolutely loved it and went there after. And, the getting to Cravath was also an interesting process that they didn't recruit at Notre Dame at the time. It wasn't a good enough school. I don't know. It probably still isn't. And I had happened to have a professor that he was actually my worst grade, my 1.0 year, if you can believe it. He thought that it would be good for me to talk to his friend from law school who happened to be a partner at Cravath. I had no idea what Cravath was at the time. I went home, looked it up, and said, okay, I definitely should take this introduction. He ended up going on a mission trip, and I never got the introduction. And so I just reached out to the partner and said, such and such professor was going to introduce us. I would love to meet. He called me the next day, and the rest is history on that.
That's amazing. That's exciting.
Yeah, it was looking back, it's a good story. It took me a while to get the guts to reach out to him, though.
I bet. And I know, so that was a big deal for you. So and this being a critical part of your journey in your career, for you to step out and do something that no one else is doing. It sounds like that's been a reoccurring thing for you as well.
It is. And I would say that, the one thing that I've always tried to do, and even, in that story you can see, is really go out on a limb and do things that are a little uncomfortable. And I mean, the perfect example is obviously what we did with our firm and that story that I gave you about launching that. But that's been a reoccurring theme. And I think anyone that knows me throughout my career would see that it's really been about trying to push the boundaries. And, I look at what we're doing in the legal world, and obviously we have a small impact. We're not a mega firm or anything like that, but in our part of the market, I think we really are driving and pushing the boundaries of what is possible and what clients want, and ultimately, hopefully, changing the dynamic of client service in the process as well.
So, Matt, I want to get to that point, but tell me a little bit about how you met Jim.
So I met Jim through Cravath, and he started there. He was one of the heads of M&A there when he practiced at Cravath. We never overlapped, though, so I never worked for him, and we met after he had left Cravath. He went to JP Morgan to run M&A as a banker. He was at Hudson Executive Capital, which is a constructive activist M&A hedge fund. It's still in existence, that he founded with the former CFO of JP Morgan. And I met him through Mark Green, who is runs the corporate group at Cravath now, who I worked closely with when I was there, and him and Jim became partners at the same time, and so they were friends all the way through. And when Jim got hired at King & Spalding, he asked me to come and be his first hire in and help him build that group out.
That's exciting. So was this idea of how you're serving clients now in your thinking when you started at Cravath or prior, or when you met Jim? Help me understand a little bit about this desire.
I've always, and the one thing I'll say about our practice is it's extremely personal. We value the human side of it, and you have to, I think, when you have a model like ours, because a lot of what we do is sitting with a client, understanding their desires and fears, and then helping them navigate whatever the big event is that they're either about to embark on or they're going through, and help them get to the other side of that successfully. And I had always had that, I think, in me. It's obviously, I think, developed and evolved in how it gets expressed now, but I was always one that was, for example, captain of the football team or student body president in college, and always tried to relate to people. And when I first got to Cravath, I would say that I didn't do a lot of that, because as a junior, you don't have that much interaction to be able to, develop the human side of the practice with your clients. But that slowly develops as you begin to, start to lead deals, and you develop your own style and kind of learn from those around you. And I would say that, Jim and I both, because of our diverse backgrounds, at one point at Cravath, I went out to Scientific Games in Las Vegas and helped run, kind of in a hybrid role, M&A on the legal and business side. Okay. And the diverse background, I think, and Jim's diverse background being a lawyer, banker, and hedge fund executive, I think lends well to what we try to do in our practice. And that's being able to give holistic advice and then quarterback a large part of the process. And that often includes dealing with bankers, consultants, communications firms, and lawyers, and being able to use them in a way to maximize outcomes that clients need, and sometimes get them outcomes that they don't think are possible.
So how did you two end up at King & Spalding?
So I ended up because he was there.
Okay.
He was in the hedge fund and wanted to get back into advisory work. He had taken his hand at being an investor and realized that wasn't for him, and it wasn't really how he grew up in terms of seeing as he describes it, your net worth going up and down with the stock price every day. And so he ended up going to King & Spalding and getting the opportunity to build out the corporate group globally there. And when he was there, I ended up seeing, he reached out, and I saw it as an opportunity for me to really kind of step up in terms of a platform for myself and the ability to build something. Now, I wouldn't say from the ground up, because they have a successful practice and they still do. But definitely being able to build something that wasn't as established as, the Cravath practice was. It was just a different institution, and they were at a different place. And it was a great opportunity for someone that was young like me.
Yeah. And I mean, it's probably safe to say, Cravath is an institution. King & Spalding is a much more nimble entrepreneurial environment, even though it's a large firm.
That's right. It is. And in a lot of ways, that's why it's grown the way it has over the last, if you look at the last 10 years of King & Spalding's growth, it's remarkable. And it's because of their ability to be nimble, see where, different services they can add on will be impactful, and go out and execute and do it.
So Matt, I'd love for you to share a little bit about this composition of your team that you and Jim were building, because there's some non-attorney roles that you guys have hired, and you guys were doing things that I think are pushing that envelope of what you expect from a law firm. That's
right. And it started at King & Spalding, and we've implemented it in our firm now. And it's the one I think you're probably highlighting is the financial analyst that we have on our team.
Yeah.
And the best way to think of those analysts are more as hedge fund analysts than investment banking analysts. And what that really means is they are more research oriented and intelligence gathering oriented than they are going to produce a discounted cash flow model for evaluation for a company.
Yeah.
And the reason we have them is a couple-fold. One, from a client perspective, it allows for different insights than they might otherwise get from their bankers or their lawyers. And that is intelligence insights. It's more in-depth kind of market research on the public company side. And it gives you a differentiated piece of information that, it's not like we're charging for that. It's we're adding it into what we're doing, and it helps with delivering our model. And then from an internal perspective, we're able to be better prepared to serve those clients, Jim and I, on the legal side. And it's because we have different intelligence. We prepare for meetings differently. We can obtain information that you typically don't get in a law firm. And data is king, and intelligence is king when you're doing these. Particularly when you're doing public company events, and knowing what different stockholders are doing around the market and in your stock is invaluable. And the last way we use them is on our materials. And I don't know if you've ever seen law firm marketing materials, but they're not great. And we're able to upgrade those to look more investment banker like, business like, And really, I think it's helped Jim and I too of, always reorienting to what does the client want and value from a business perspective, and not just how do we give them what the law is and what the legal answer is. So they've been invaluable. We have a team. We started that at King & Spalding and hired about a half dozen or more there. The financial restructuring team ended up hiring some beyond the corporate group. And then we ended up bringing one of our key analysts when we started the firm to help run and build our group we have now.
That's awesome. Matt, let's dive in a little bit. I'd love for you to share with my audience a little bit more about who's hiring you and who you're representing, because you're interacting with some really big players and your clients have significant investments. And so would love for you to kind of give a bit of that scope and context to what you guys are, who you're relating with.
Yeah. And I would say, first and foremost, the what we come in on and the situations are catalytic and transformational or strategic events, and that could be M&A, it could be capital raising, it could be corporate governance, and even for corporate guys, we get involved in disputes and litigation and kind of messy situations. And a lot of times who is hiring us it's primarily family-backed companies or family offices, and then founders and management teams of both public and private companies. Okay. We're getting more exposure to the private equity world. We're not private. I would never claim to be a traditional private equity lawyer, as I said before, but private equity firms see us as a different tool in the tool belt because of that last category of matters that I was talking about, where there's messy situations. So we've been getting hired by financial sponsors to come in and, with problem child portfolio companies, whether it's they have a founder that's left and is competing and suing them, and they need to figure out a way to resolve that and then sell the company, or there's some kind of liability issue or governance dispute that needs to be resolved, and then there's a kind of either a sale or a capital raise or something on the backside of that helps unlock value. And on the M&A and kind of the public company side, it goes everything from special committees at the board where you need a real strategic advisor to help navigate an alternatives process. A lot of times when there's a lot of scrutiny from shareholders and likely litigation coming, as well as shareholder activism events. We've done a few big ones in that space with and around the likes of Carl Icahn. And, one big one we did in that was we represented Darwin Deason, who sold his company ACS to Xerox in 2009 for, I think it was $8 or $9 billion. He owned roughly a third of that, and was the second largest holder of Xerox, and ended up, we launched a litigation around a merger between Xerox and Fujifilm that we ultimately we got the first ever injunction in New York on, wow, as well as a simultaneous proxy fight with Carl Icahn on Xerox to take over the board of directors there. And then we subsequently represented Xerox against in a hostile takeover against HP.
That sounds like so much fun.
It is. It's it makes for stressful days sometimes, but it's a lot of fun. And for someone like me, I like being in the action. And this practice has really developed a niche where we are focusing on things that you're really in the action, and everything you're doing is making an impact.
So Matt, just to kind of take a small tangent, what was it like to be on the other side against Carl Icahn?
So we've been on the other side a few times. And look, we've were in that situation. We were with him on the same side. It's always with Carl. You're going to, there's no BS in what goes on, and he tells you what he thinks, and it's not always what you want to hear. And you better be very sharp about what you're arguing on the other side of him, because you always know he's prepared. He knows exactly what the arguments are around the issue, and he has a very strong perspective on it. And it's always going to be a dogfight. He is one of the best and most successful investors for a reason. And it's because when he has conviction, he takes it all the way. And but again, even when you're on the other side, you always learn something from him. And I've been fortunate to have that exposure, fairly early in my career. And a lot of people don't get that exposure with him. Even people that practice in corporate and M&A, they just don't, they either haven't dealt with him or they're just not involved in situations around him. And I've been very fortunate and have learned a lot from him, even when we've been on the other side in some cases.
Are there any other personalities that have kind of really been of interest, to name drop a few, or people you've come across in your practice?
Yeah, there's two that I've personally, from a perspective of that are very interesting people and that I have learned a lot from. On the client side, Darwin is a great example of that. He, for a lot of people, and he's Googleable, you'll see a lot of articles about him. He is the first person that I've seen really push boundaries on what we were able to do. And he was always, as a client, very sharp in terms of quickly understanding the issues, even if they were complex legal issues, how it related back to the business, and then be able to figure out the path that we need to go on very quickly. And that's rare for people that don't do what we do every day. Yep. And Darwin was able to excel in that. And I think, that's part of the reason, again, why he was so successful at having a great outcome for his business. He started as a Arkansas farm boy that he didn't even have 2 nickels to rub together, and built a company that was able to sell for a sum of money like that. It's an incredible story, and it's because of his character. The other one is a guy named Bill Linton that I represent. He founded a company, Promega, roughly 40 odd years ago, and it's in the diagnostic space. And I met Bill he had a situation where he was getting sued by, roughly 25% of his shareholders in Wisconsin. They were suing, and basically the result of the case would have been, if it went against him, would have been he would have had to have sold his company. And that obviously was not a outcome he wanted, having built the company from a very small kind of one-room building to a very large private enterprise. And he had a 4-year litigation that he went through it took a toll on him. And I came in right before the judge ruled, but after trial, to try to figure out a strategy to help him find a resolution that did not involve selling the entire company. We ended up running an auction process, which the judge let us do, because we walked in and said, we've already started this. We're going to have buyers on the other side of this. We have 100 that signed NDAs, and we're going to get our price, and what price you make up we're going to have the answer here in a few months. And we ended up running that process for, like I said, 9 months through COVID. One buyer we had a done deal, and 2 hours before we were going to tell the judge, they walked away from the deal, and we had to start all over again. And the thing I learned from Bill in that process, and is why I mention him, is I've never seen a client keep an even keel throughout something like that when the stakes were as high as they were there. And I always think back to that and talk to other clients about that experience, because it takes a special kind of person to keep that mindset. And especially when you're dealing with losing your company. And he and I were talking 10 times a day, every single day for 9 months. Wow. And it was a very long, tiring process. And that was after 4 years of litigation he already went through. But he was able to keep that perspective of where he wanted to go and to stay calm throughout the process. He never got excited about anything, and he never got down about anything. And that's a rare thing. And he's not one that publicizes himself or what he does, but if more people knew him, they would put him up there with the greats that people talk about in terms of business people.
What was the outcome?
We ended up getting a settlement that we had a strategic investor, another strategic from Germany that Bill had a relationship with, as well as bank debt to fund the settlement. And so Bill was able to get a good result for him. He wanted an outcome that had a resolution on the litigation, but did not disrupt the culture of his company. Yeah. And some of the investors and investor types that we were talking to, I think, would have had a material, probably negative impact on his business culture and potentially his business. Mm-hmm. And he was able to get an outcome that did not have that negative impact.
That's awesome. It's a great story. Thank you for sharing that.
Yeah.
Matt, I'd love to dive in a little bit in regards to an article that Harvard Law put out called The Changing Face of Activism. And it seems like you're right in the thick of it with what you guys are doing. So it talks about this notion of activist versus constructivist. And I'd love for you to share a little bit about what that means. Constructive engagement is another term I saw that Jim might be the one kind of leading the charge on, and you're being a part of that. Also, would love to hear, so these other parties are getting involved. We've got financial sponsors, we've got long-only funds and investors, and everybody wants a say in these public companies. How are management and boards dealing with this? And tell us your perspective on all of this.
Yeah, and this is something that when we got to King & Spalding and we started to build out that group, we leaned heavily into this. And the reason was it's evolving and becoming more robust, and it's becoming more of an enterprise risk issue for public companies. Mm-hmm. And a lot of the dynamic is around, I mean, set aside activists that have been there for a while, and we all know them, and they're often, most of the time, pushing for operational changes, pay changes for management, more oversight by the board, different corporate actions, more operational and strategic, I would say. And you've started to see the evolution with, take BlackRock is a great example of this. They own a third of all of the public companies, every public company. And they have a strong voice in the room, and what you've seen in that evolution, and they're not alone in this, but is build out corporate governance teams and internally that push policy down onto the public companies. And that an easy example of that is oil and gas companies and looking at renewables away from oil and gas. And you see them becoming more active in their engagement and pushing those policies, and will vote against things and use their vote to help push those policies and to get managements and boards to pay attention, add more disclosures, change strategy around things. And that's having a real impact. And so what we were doing and we continue to do, and this is developed more now, and there's a lot of others in the space doing it, is really talking to boards and management teams about shareholder engagement. And you could even extend that to stakeholder engagement that goes beyond shareholders. And that's what that really is developing a plan to go out, talk to these big investors and these policy organizations and help them understand what you're doing and why you're doing it. And as well as take in feedback from them on what's important to them, what would they like to see, and then having a collaborative effort to change some of and tweak some of the strategy to help find a middle ground between the two. Yeah. And in a perfect world, what that does is it's a little bit of preventative medicine where, if you have an activist or someone come eventually, you've already been engaging with your entire shareholder base. And you know how they feel about you. They know what they feel about different policies that you have or different strategies you have. And you're better able to fend off or be protected against an activist coming to you. And you're also better able to prevent one of these organizations becoming public and vocal themselves about an issue that you have. And one of the interesting things that's a kind of a side development of this is there's been a lot of focus from the investor community on what people deem as left-wing policies, and so kind of more progressive policies. And now you're starting to see in different pockets, Strive Asset Management is the perfect example of them, where the other side is coming back. And so you're seeing more right-wing policies get implemented, or at least not implemented, but pushed by investors. And so companies now are caught in the middle of this. And they need to figure out how to navigate in between the two to ward off attacks from both sides on companies.
So I can't help but notice that your values are coming through your services in bridging relationships and being preemptive. So, talking with you, that relationship is so important as you're connecting with these founders and families and family offices. And even one of your approaches to try to get ahead of the game is relationally building that bridge with these other financial sponsors to kind of create relationship instead of adversity and things get public. Is that correct? Is that kind of your approach?
That's exactly right.
Okay.
That is a big piece, because I view my role as needing to understand, first and foremost, what my client wants to accomplish.
Yeah.
And what they don't want to happen, which is often just as important. And then actively help them and assist them with building the relationship, the community, and the execution around those things. And often what that is encouraging them to go have conversations with their stakeholders, have conversations with their customers, their business partners, and really engage in a dialogue where temperatures are down and there isn't a fight going on, to build community, build rapport, because when there is something where people, and there always is, there's always going to be something where people disagree, whether it's a disagreement on a board or disagreement from a large shareholder with what management is doing. If you have a dynamic where you've spent time with each other and built that rapport over a long period of time, you're going to have less of an issue getting through that dispute. It doesn't mean you're always going to agree.
Yeah.
It just means you're going to have a better foundation to build off of. And I think that's a lot of what the industry has gone towards, is being reactive.
Yeah.
And what we're really talking about is shifting that to be proactive. And it takes, and this is part of why we developed the model we did, because a lot of the advisor community doesn't have the time to build to really be thoughtful about how clients should be proactive in helping them do that. And because that means that I have to really understand my client's business and be proactive myself in giving advice. And it's just the industry it's hard for it to do that. Yeah. And our model, we are really built to do that. And that was a guiding principle when we started, where we wanted to be true partners and that first phone call that the client makes.
So Matt, I'm going to dig in a little bit more, and I want to bring something to the surface. What I'm noticing about you is a superpower. Now, you may not call it that, or you may agree with me, but why do these high net worth, powerful families try to be kind of quiet, trust you? Like, what is this trust, or what is it about inside of you that says, I love this and I can do this and you should trust me? Help me understand a little bit more about either how you got to this place where they trust you, and or, this thing that connects relationally with people to accomplish their goals.
I think it, in terms of my preparation for this, it's really been something that even since I was little, that was driven into me by my parents of, you have to connect with people in life if you want to do anything and if you want to enjoy life. And I've always been encouraged to do that and to try to lead, and to be out front. Like I said before, in athletics, I was always encouraged to do that and to corral the team. And I think, probably unintentionally, at least, for me, I developed a skill in being able to do that. And when I look back at my experience in the business world, I think the one aspect that I was fortunate enough to have was Cravath was an environment where they threw you into the deep end very quickly. And when you do that, you have to figure out how to help a client. And you have to develop that skill where the client trusts you when you're a second-year associate out of law school. And they'll trust for part of the reason that, they know the brand and they know the firm. But at some point, it's got to be you. Yeah. And you have to do that. And part of me, I think, learned it just by getting thrown in the fire like that. Yeah. And, once you have a little exposure and you have a track record where you've helped someone, it's easier to help the next person. Yeah. You have the experience to build on. And then two, you have a client that will tell the next person, if you do a good job, that you help them. And, I go back to the Bill example, and I love telling this, and it's not to pat myself on the back, but I think it's, exactly what you're talking about, where I've had someone ask him how we met and who I am, and it was a potential client of mine, and he said, this is the guy that saved my life. And when you have people that do that, I think people just will trust you intuitively if they respect the person that's saying it. Yeah. And, after that, you have to deliver, and you have to trust that you know how to get people through the fire. And if you have to be committed to be there with them through the whole time. And I think that's the one thing that clients will say. I'm relentless with always worrying about clients and always thinking about them when I'm going through something. And that means texting them at midnight sometimes, or 6 a.m. Hey, I thought of this when I was laying down for bed. We should talk about this or that. And when you're able to do that, I think people realize that regardless of, there's no panacea here, and you're with someone that's got their back, and that's really what matters. Yeah.
Matt, how can people find you, contact you, follow you on social media? What do you recommend?
Definitely our website, WooleryCo.com. I'm on Twitter. If you look up my name, there shouldn't be too many Matt Saurs or Matthew Saurs on Twitter. And then On LinkedIn's always easy as well. Again, just search my name or Woolery Company, and you'll find me pretty quickly on there.
Excellent. Matt, it's been an honor and a pleasure. Thank you for your time today.
Thanks for having me. I had a blast talking to you.
Yeah, me too. Thank you.